this our colleague Sudarshan was standing by, and this is, of course, I mean, banks, NBFCs, and what your peers in the broking side are also making of all of this. So take us through that.
So almost all the brokerages have written RBI policy, and they believe that the RBI policy announcements are going to be more positive for banks than NBFCs. So we'll start with Nomura. It says CRR cut is going to benefit, and it's going to be higher for mid-sized banks like IndusInd Bank, AU Small Finance Bank, and federal banks. Also, it will benefit deposit growth constant large banks like Axis Bank and HDFC Bank. Coming to Goldman Sachs, beneficiaries of RBI policies are Axis Bank and HDFC Bank. Also, NBFCs with higher proportion of fixed rate assets can benefit, and those are SBI Card, Shriram Finance, and Chola Finance. Also, companies with better mix of fixed versus floating rate assets and liabilities, and those NBFCs are or banks, AU Small Finance Bank, IndusInd, and IDFC First Bank. Coming to Citi, it says policy announcements are positive for banks where deposit growth is closely monitored, and those banks are HDFC Bank and Axis Bank. Now, UBS, it says banks requiring greater liquidity will benefit, and those are AU Small Finance Bank, HDFC Bank, and Axis Bank. UBS says sustained decline in PSU bond yields could lead to additional 10 basis points benefit in cost of funds in FY26 for companies like PFC and REC. Also, NBFCs with higher share of bank borrowings to benefit more, and here those companies are Chola Finance and M&M Finance.
So thanks very much for that. So that is, the sell side view coming through.